Hello everyone, welcome back to the channel. I'm Trading Co and this is the ultimate advanced price action course. And in this course we are talking about fair value gap and inverse fair value gap. So without further ado, let's get into the video. Okay, so what is a fair value gap and what is an inverse fair value gap and how do we trade with them? So let's start with fair value gap. A fair value gap or called as Ifvg is a three candle price action pattern that represents an inefficiency or imbalance in the market where buying and selling pressures were not equal. It appears as a gap between the wick of the first candle and the wick of the third candle, leaving a fair value gap area within the middle candle range. This area is often seen as a magnet for price to return before continuing its original direction. So let's talk about how to identify a fair value gap for now. First, look for three consecutive candles. A strong, large-bodied candle is the key. As shown here, you can see these are three consecutive candles, and the strong, large-bodied candle is our key. And this entire candle will be our fair value gap if it doesn't have wicks. But let's say the price have wicks. Wait, oh, let's say the price have wicks something like this, and this will be the wick of this candle, and this is how if it looks, then we'll be taking this candle low and this candle high as a zone, and in this zone this big candle causes this fair value gap and we'll be extending this zone to here. The same thing goes to the bearish. Let's say this is okay. Let me just make it red for better visual. Wait, where's the, where's the drawing tool? There's no drawing tool. One. Okay, we have made it red, and now let's draw wicks. Here the wick 1 and the wick 2, and this zone will be our fair value gap for the bearish side. This one is the bullish and this right here is our bearish fair value gap. Now let's talk about the types of fair value gaps. తీస్తున్నా. Okay, there are two types of fair value gaps. One is bullish FVG or fair value gap. A green or bullish candle is that large relative to its neighbors. The space between the previous candle high and subsequent candle's low forms the bullish gap. This is interpreted as an area where price is likely to be supported and reversed upward if it falls back into it. Let's say that price have now got rejected from this area. Let's say the fair value gap has just created right now and the price will go further, and then all of a sudden the price will try to fill this gap and get reversed from it. And this is where we'll be taking entry. When the price reverses from this area, we'll be taking entry here with stop loss and target set, which should be likely to be 1:1 or 1:2. And the same thing goes for bearish FVG. Price all of a sudden try to fill this gap and gets reversed from it, and when it gets rejected we will be taking entry with 1:1 or 1:2 risk reward ratio. Now let's talk about what is a bearish fair value gap. A red or bearish candle that is large relative to its neighbors. The space between the previous candle low and subsequent candles high forms the bearish gap. Here you can see this gap will be considered as fair value gap, which is bearish, and this seen as a potential area where price might reverse downwards if it pushes back into it. And now let's talk about how do we trade with fair value gap. Okay, let's find some real examples and let's discuss about how we're gonna trade with them. The previous one we have seen is a inverse fair value gap. We will be discussing about it later. For now, let's find some fair value gaps instead of inverse fair value gaps. Okay, let's just go to USD and we haven't seen. Let's go even higher time frame. Okay, guys, we have found a fair value gap in. Okay, this is not a fair value gap either. I forgot. Let's okay, here we have found a fair value gap. Here you can see this gap will be considered the fair value gap, and here you can see that the price came to this level and touched or came inside the zone and got reversed. We'll be taking entry when the price gets reversed. That's our trade plan, and our stop loss should be buffer points with below zone or above the zone and target at this high. And this is how we trade the fair value gap. Now let's find another two examples to actually get even more idea on how to trade the fair value gap. Okay, here we have found a fair value gap, and you can see right after creating the fair value gap, price immediately came inside the fair value gap and got reversed to the upside. And our idea should be taking entry here with stop loss and target as 1:1. And you can see that the price did eventually hit our target with, and after that, after some while, the price did end up going even higher. Now let's find one last example and then we'll be discussing about inverse fair value gap. Okay, here you can see we have spotted another fair value gap. Sorry, not this. Here you can see we have spotted another fair value gap, which is now a bearish fair value gap. And you can see that the price came to inside the fair value gap and ended up reversing to the downside. Our situation entry is we will be taking entry here with stop loss and target as 1:1, and price ended up hitting our target. Now let's talk about inverse fair value gap. Okay, now we have completed the fair value gap. Now let's talk about the inverse fair value gap. So what is an inverse fair value gap? An inverse fair value gap, or called as Ifvg, is a trading concept that occurs when a price moves to the and then breaks through a traditional fair value gap, causing the FVG or fair value gap flip its original role and become support or resistance in the opposite direction. Unlike an FVG or fair value gap that signals a tendency to retrace and fill the gap, an inverse fair value gap indicates a continuation bias, suggesting the price is likely to break past the old gap and continuing move in the same direction. As the breakout, it represents a zone where previous support turns into resistance or vice versa. After a strong impulsive price moves, after an impulsive price move breaks through it. So what it is? A flip in the roles. An IFVG forms when price moves through a previous identified fair value gap, flipping its role from an area of potential retracement to a level that now acts as a support or resistance. And the continuation bias and IFVG or inverse fair value gap is associated with market continuation and reinforcement of breakouts, unlike an FVG that has retracement bias and invalidated fair value gap. It can be thought of as an fair value gap that has been invalidated because the price has moved past it impulsively. So now how do we spot an inverse fair value gap? First we will be identifying the fair value gap. So okay, here we have spotted a fair value gap of bullish and bearish. Now what we need to do is wait for the price to come or get inside the zone and wait for the price to either get reversed or continue the move to downside again. And When the price continues the move to downside and breaking this fair value gap, it has been now became a inverse fair value gap. So observe the breakout, watch for an impulsive price move that closes or breaks through the fair value gap. Now mark the new level. If the bearish Ifvg previously acted as resistance is broken to upside, it becomes a new support level. Here you can see if price breaks the fair value gap, now it will be becoming a support instead of bearish fair value gap, and the same thing goes for bullish. If a bullish FVG or fair value gap previously acting as support is broken to the downside, it becomes a new resistance level now. So now how do we trade it? That's the main thing. And here, as I told you, when price closes below or breaks through and closes, we'll be taking entry right after the breakout. So now let's find some real-time examples of inverse fair value gap. Here you can see we have spotted a fair value gap. So what will we do? We will follow the first step, marking the fair value gap. And the second step we should be doing is that to wait for the price to eventually break through. Here you can see the price given an entry, but it's still given a small move instead of giving a huge move. But still, if we're taking the risk reward of 1:1, the price did eventually or likely hit the target. And you can see after that the price broke into the downside and now became a inverse fair value gap, and this zone will be becoming as resistance. Now let's extend this and you can see it even further. So here our first entry is when the breakout happens, and our target should be this low or previous swing lows or previous swing highs according to the entry or the side you are taking. And you can see that the price did came to retest this level again, but ended up reversing again. Now let's find another two examples and end this video. Okay, we have spotted a fair value gap of bearish, and you can see we have extended it. Price did kind of reacted, but there is a previous, sorry, this is not a fair value gap, this is a previous bull, sorry, this is the sub demand zone of the previous price action, and you can see that the price got reversed from here, but it didn't give a huge move to downside, but it is still kind of enough for scalpers or day traders. You can see that the price did eventually hit the target of 1:1 ratio, and you can see, okay, you can see that the price closed below and given a small move, but after that move price ended up going above and given us breakout of this fair value gap, and this kind of indicates that this have now became a support instead of the bearish fair value gap. So what we'll be doing, we'll be taking entry with this as our stop, sorry, this as our entry, or you can take this candle as the entry point, the point where the price got reversed. You can just take entry at here with target of 1:1 or target at swing highs or swing areas. And this is how you trade this is how you trade inverse fair value gaps. And that's all for this video, guys. Don't forget to check out our app called Trading Co, which will be linked down in the description, and don't forget to check out Telegram for updates and more upcoming events. And don't forget to check out the playlist of Ultimate Advanced Price Action course, and don't forget to like and subscribe, and I will see you in the next video.